Swayam Prabha. Digital India. Educated India.
योगः कर्मसु कौशलम्.
Hello everyone, I am Dr. Chetna Marvadi, Associate Professor, School of Commerce, Gujarat University. Today, we are going to study a new method in costing, which is process costing. Process costing is one of the important methods of costing. The study of this topic has high relevance with applicability of it to certain enterprises which are engaged in manufacturing sector. The learning objective of this part 1 are: number 1, to understand what is process costing. Number 2, to understand where to apply process costing. Number 3, to understand procedure to be followed for ascertainment of process cost. Number 4, to understand difference between job costing and process costing. Number 5, to understand features of process costing. Number 6, to understand elements of cost of each process. Number 7, to understand important point to note for process costing. Number 8, to understand format of process account. Number 9, to understand process account through simple illustration. Now, let us understand what is process costing. A cost determination is very crucial task for cost accountant. There are different types of costing methods, and for specific industry, specific costing method is used. For various industries, several methods of costing are used. For example, in industries where production is continuous, the cost per unit is found out by using unit costing method. When any job or contract is undertaken, job costing or contract costing is used. Likewise, in certain industries, production is carried out on various stages. For example, coconut oil is produced in different stages. In first stage, coconuts are crushed and oil is extracted. In second stage, oil is refined, and finally in the third stage, it is packed for selling. Coconut production passes through 3 different stages. These stages are indicated. Coconut oil production is obtaining after completion of 3 processes. Here, the method of costing to be used is process costing. CIMA has defined the process costing as follows: the costing method applicable where goods or services result from a sequence of continuous or repetitive operations or processes. Costs are average of units produced during the period. In those industries where a product passes through distinct stages of production, the method of costing employed to ascertain cost of production at each stage is known as process costing. It is possible to ascertain the total cost of product even in these industries, which is not enough. The different quantities and types of byproducts and wastages arise in various processes, which makes it desirable to find out separate cost of each process of the operation of each unit. This method is used by the industries where there is a continuous flow of identical products and it is not possible to distinguish one unit from another. There are numerous industries using process costing, some of which are textiles, chemicals, oil refinery, biscuit works, soap making, paint manufacturing, fertilizer industry, etc. In case of unit costing, cost of a product is categorized into different costs like prime cost, factory cost, office cost, cost of sales, etc. In case of job costing, cost of a specific job is ascertained, while in case of process costing, cost of each process is determined. For cost determination, proper order or procedure is to be followed. For process costing, well-defined procedure should follow to arrive at a very precise and accurate cost of each process. Let us see the procedure to be followed for ascertainment of process cost. Let us understand this process. In order to facilitate ascertaining separate cost for each process or operation, the procedure may be followed. First step is distribution of total cost. The total production is divided into separate processes or operations under which the cost can be conveniently collected. Number 2, separate account for each process. A separate account is opened for each process and each process account is charged with the material, labor and other expenses incurred directly for the process concerned as well as with its shape of overhead charges. Third, determination of cost of each process. The total cost of each process is ascertained and it is divided by the total number of units produced during the specified period, and the cost per unit of each process is thus ascertained. Number 4, transfer of product. The finished product of the first process is transferred to second process, from second process to third process and so on. The finished product of last process is transferred to finished stock account. Fifth, reserve for unrealized profit. Usually, the finished product of one process is transferred to the next process at a cost, so that the last process account gives the actual cost of finished products. At times, the finished product of one process is transferred to the next process at cost plus a certain percentage of profit. In such case, the closing stock contains loading for profit charged by the previous processes. Hence, reserve for unrealized profit has to be created at the end of financial year and the stock is reduced to its cost price. The calculation of a reserve for unrealized profit involves a few difficult arithmetical calculations. The proper understanding of any concept or theory is based on familiarity of characteristics of that respective concept or theory. Thus, to understand the concept of process costing, let us see features of process costing. Now, we will understand features of process costing. Some of the features of process costing may be stated like: number 1, transfer to finished product of each process. The finished product of one process becomes the raw material for another process. For example, in production of coconut oil, first process will be crushing process, where the raw coconut is raw material for this crushing process, but the crude coconut oil is finished product of crushing process, but it is the raw material of the second process, which is the filtering process. Second, wastage or loss. Ordinarily, there is some wastage or loss in weight during the various stages of production. For example, in chemical or petroleum industry, some part of raw material evaporates and some of it is thrown away as wastages. Thus, finished goods obtained from the processes generally has less than the quantity of raw materials introduced. These wastage or losses are of two types: normal loss and abnormal loss. Normal loss deals with inherent quality of raw materials or engineering system. Normal wastage or loss are expected, but abnormal wastage or loss is the result of happening of unexpected events, means happening of non-controllable factors. Third, byproduct. Byproducts are frequently obtained during the production of main product. For example, in petroleum industry, while refining crude oil, various products of small value are obtained at various stages. Generally, byproduct will have realizable value. Fourth, allocation of joint cost. At times, joint products are obtained during the same process of production and the problem of separating the joint cost arises. Various methods are used for separating the joint cost because cost of each product is to be determined separately. Fifth, inter-process profit. There is a practice in some firms to charge certain percentage of profit while transferring finished goods of one process to the next process. At the close of the year, there will be some stock of finished goods in each process, the value of which will contain the profit charged by the previous process. This profit is unrealized profit. A reserve has to be created for such unrealized profit. Planning and control are two important functions of management. To arrive at planned objectives or results, the implementation or execution of control is essential. The execution of control is to be exercised on elements of each process. Some common elements in process costing are: let's understand the elements of cost of each process. The total cost of each process consists of different elements of cost, that is, first direct material, second direct wages and third overheads. Let's understand direct materials. Separate details are available for the cost of direct material used in each process. Each production department makes demand for raw materials on the basis of material requisition. On the basis of these requisitions, the total cost of raw materials used by each process is calculated and charged to various processes. Now, let us understand second one, direct wages. These costs can be easily computed separately for each process. Wage sheet for workers employed in each process may be separately kept or separate columns are kept for each process in the wage sheets. The total wage cost is found out on the basis of these sheets and is debited to respective process accounts. If the same workers works into two or more processes, then his wage is apportioned to various processes on the basis of time devoted by him. Let us understand overheads. These are the expenses common to all processes and have to be apportioned. We have already studied the basis of apportioning such overheads to various departments. For example, rent is apportioned on the basis of space occupied. Most of the expenses are charged on the basis of direct wages of each process. However, various indirect expenses have to be allocated on the basis which is most suitable to the case under consideration. Let us understand finished goods of previous process. Under process costing, accounts of different processes are prepared. Generally, finished product of previous process becomes raw material for next process. So, cost of subsequent process is inclusive of cost of previous process. Here, it will be pertinent to understand the difference between process costing and job costing. Let us understand this difference. Let us understand the difference between process costing and job costing. First point of difference is stages. Under job costing, cost of each job or batch is ascertained. It has nothing to do with the time taken and stages of completion. Whereas under process costing, there are separate jobs or batches and no cost of each job or batch is determined. Here, production is divided into distinct stage and cost of each stage is ascertained. Second point of difference is nature of product. Under job costing, product, job or batch is produced according to specific requirement of customers and specific cost of that job or batch is ascertained. Whereas under process costing, production is a continuous and identical units are produced. There is mass production and cost is determined for each stage of production. Third point of difference is work in progress. Under job costing, at the end of the year, there may or may not be work in progress, whereas under process costing, there is always some work in progress in beginning and some at the end of the year. That is, there are always opening and closing stock of work in progress. Fourth point is completion of work. Under job costing, cost is determined when each job or batch is completed. Under process costing, cost of each stage of production is determined at the end of specified period of time and transferred to next process. Fifth point of difference is apportionment of overheads. Under job costing, prime cost is first determined as it is directly attributable to the job, but overheads are apportioned to various jobs on some appropriate basis. Under process costing, it is easier to determine total cost of each process as most of the expenses are directly attributable to each process. Sixth point of difference is cost determination. Under job costing, for each job, material, labor and overheads are added and cost determined for each job separately, whereas for process costing, total cost is collected and averaged over a specific period of time to determine process cost per unit. Seventh point of difference is standardization of cost. As the production of each job requires different methods of production, it is not possible to standardize the cost of each job under job costing, whereas under the process costing, as the production is identical in process costing, it is possible to standardize cost of each process, normal loss, time of production, etc. Now, let us consider important points to be noted for process account. Let us understand these points. Number 1, it is an account. Thus, it will have two sides, debit and credit side. Number 2, each side will have 3 columns, one for particulars, second for quantity and third for amount. Third point, debit side represents all expenses pertaining to the respective process. Fourth, credit side represents income if any, like realization from scrap or from normal loss, and quantity and amount in the form of cost of respective process. It is finished of process and raw material for next process or finished product as the case may be. Number 5, debit side of process account, there may be abnormal gain and at credit side there may be abnormal loss. 6. In case of difference in quantity column at debit side it will be abnormal gain and at credit side it will be abnormal loss. 7th, total of both side of process account of quantity column and amount column must be equal after having ascertainment of any difference in both the columns. 8. Per unit cost of abnormal loss and abnormal gain shall be equal to per unit cost of actual production. 9th, format of process account. Let us understand this format. As we have discussed, under the process costing we have 3 column on debit side and 3 column on credit side. So, on debit side we have particulars, quantity and amount rupees, and on credit side also particulars, quantity and amount rupees. First we will write on debit side to material account in quantity and rupees, and on credit side we will write to normal loss if any. On debit side we will write to labor account for wage expenses, and on credit side to transfer to the next process account. On debit side next item is to overhead account, and on credit side next item is to abnormal loss account. And on debit side we will write any other relevant expenses related to process, and then we will record on debit side to abnormal gain account if there is any gain. Note that there may be either abnormal gain or abnormal loss. Let us understand process costing with the help of illustration. Illustration 1. A product passes through 3 distinct processes to completion. These processes are called respectively A, B and C. During the month of March 2024, 2000 units are produced. In this regard, information is obtained. Now, information for process A, process B and process C is given. Material cost for process A rupees 3800, for B 1200, for C rupees 500. Labor cost for process A rupees 2000, for process B rupees 2500, for process C 1500. Direct expenses for A 800, for B 1000 and for C 400. The indirect expenses for the period are rupees 1200, which are apportioned to the process on the basis of wages. No work in process or progress stocks existed at the beginning or end of the month. Now, let us prepare the solution. Consider that first, in preparing process account, generally 2 columns are kept on both the sides, one for units or quantity and the other for amount. But here number of units or quantity is not important, and so it is written at the top of the account. Second, the overhead expense of rupees 1200 is to be apportioned over all the 3 processes in the proportion to direct wages, which are rupees 2000, rupees 2500 and 1500, giving us 4:5:3. Thus, overhead of process A will be 1200 multiply with 4 divide by 12, which is equal to rupees 400. For process B, 1200 multiply 5 divide by 12, which is equal to rupees 500, and for process C, 1200 multiply 3 divide by 12, which is equal to rupees 300, and it will be charged accordingly. Third, no information is provided for output of each process. Thus, cost of 2000 unit is considered at the end of each process. Now, let us prepare process A's account. Our output is 2000 units. We will prepare the process account as we have discussed in 6 column, 3 column on debit side and 3 column on credit side, which is of particulars, units and total rupees. On debit side, first we will write to materials account rupees 3800, and on credit side we have first entry by process B's accounts rupees 7000, and it is goods transferred to the next process B. On debit side, our next record is to labor account for rupees 2000. Next is to direct expense account rupees 800. Next expense is to indirect expense account rupees 400, making total of rupees 7000 on each side. Consider that per unit cost of process A is equal to total cost divided by total output, that is rupees 7000 divided by rupees 2000, which is equal to rupees 3.50. Journal entry for the same process is process B's account debit rupees 7000 to process A's account rupees 7000. Now, let us prepare process B's account. Our production is 2000 units. Same way we will prepare a process account having 6 columns, particulars, unit and total rupees on both the side, debit side and credit side. On debit side, we will write all the expenses and goods transferred from process A's account, and on credit side, we will record the goods to be transferred to process C account. So, on debit side, first entry is to process B's account rupees 7000, which is the goods transferred from process A. On credit side, we will record by process account by process C's account, which is goods transferred to process C account. Amount is rupees 12,200. Now, we will prepare process B's account. Output given is 2000 units. On debit side, we will write all expenses, and on credit side, we will write the finished product of process B to be transferred to process C. As you all know, process account is having 6 column, particulars, unit, total, rupees on both the side, debit and credit. So, first we will record on debit side. To process B's account, it is for goods transferred from previous process A, and amount is rupees 7000. The next is to materials account rupees 1200, to labor account rupees 2500, to direct expense account rupees 1000, and to indirect expense account rupees 500. And on credit side, by process C's account, that is goods transferred to next process C, amount is rupees 12,200. Amount is rupees 12,200. Now, let us prepare process C account. Before that, we will calculate per unit cost of process B. Per unit cost of process B is equal to total cost divided by total output. Total cost is rupees 12,200 divided by 2000 units, giving us per unit cost of rupees 6.1. Now, we will prepare final process C account. Output given is 2000 units. On debit side, we will record transfer from process B plus other expense of process C, and the output of process C will be transferred to finished stock account. You know the format of process account. We will prepare process account in 6 column, particulars, unit, total, 3 column on debit side and same columns on credit side. On debit side, first entry is to process B's account, that is goods transferred from previous process B, amount is rupees 12,200. Next is to materials account, rupees 500, to labor account rupees 1500, to direct expense account rupees 400 and to indirect expense account rupees 300, making total of rupees 14,900, and this rupees 14,900 we will transfer to finished stock account. So, last entry on credit side is by finished stock account goods transferred to store by the amount rupees 14,900, and per unit cost of process C is total cost divided by total output, that is equal to rupees 14,900 divided by 2000 units, which is equal to rupees 7.45. Now, let us prepare summary of the results of this product. Per unit cost of process C is equal to total cost divided by total output, which is equal to rupees 14,900 divided by 2000 units, which is equal to rupees 7.45. Now, let us prepare summary of the result of this product. So, we will prepare in 4 columns. First column is for process, second column for total cost in rupees, third column for units produced, and fourth column per unit cost in rupees. For process A, total cost rupees 7,000, units produced 2,000, therefore, per unit cost is rupees 3.50. For process B, total cost rupees 12,200, units produced 2,000 units, and per unit cost is rupees 6.1. For process C, total cost is 14,900 rupees, units produced 2,000 units, therefore, per unit cost is rupees 7.45. Finally, per unit cost of finished goods is rupees 7.45. Keeping in mind this cost, company will determine selling price after adding profit according to the pricing policy of the company. In this first part of process costing, we have studied about number 1, what is process costing, number 2, how it is different than other costing methods like unit costing and contract costing, number 3, industries where process costing is applied, number 4, what procedure should be followed to make effective ascertainment of process cost, number 5, detailed study on difference between job costing and process costing, number 6, features of process costing, number 7, elements of cost of each process, number 8, some important point to be noted for understanding process costing precisely, number 9, format of process account where different components are disclosed, and number 10, understanding process account through simple illustration where different processes are involved. In next part, that is part 2 of process costing, we will undertake study on first theory of some important aspects of process costing like normal loss, abnormal loss and abnormal gain. Second, understanding of normal loss, abnormal loss and abnormal gain with appropriate illustration. Third, understanding accounting treatment of normal loss account, abnormal loss account and abnormal gain account. We will meet for part 2 in short time. Till then, refresh part 1 of process costing. I hope you have understood the basic of process costing. Thank you.